Well, look at us up $250, probably more than the markets. The SPY is only up 0.26, so that's not bad. It is 11/16, November 16th. It's a Friday, 9:50 p.m., making this in a reasonable hour for once. Let's do overview of the portfolio and then some trades that I made, and we'll talk about a little bit of the future and the macroeconomic outlook that I'm seeing. So first of all, if this is very rarely happens, but my watch list actually had a perfect day, and it's not in my portfolio. It's just my watch list. Some of the things include the GDX, which is the gold miners, big miners ETF, the SPY, which is the overall S&P market ETF. This is India, China, Rio Tinto, it's a commodity company. NYMT, something I was talking about yesterday, New York real estate, a fund that gives a fat dividend. VNQ, I think it's another real estate dividend. WPC, more real estate. This is AIEQ. It's a algorithm ran artificial intelligence type of ETF that tracks the market more or less. SKT is Tanger, I think, retail real estate, and OGS is a gas. I shouldn't have ever sold OGS. Look at this chart, by the way. Look at this OGS's chart. Look how beautiful it is. This is the 1 month, 3 month. Look at the year. Look at the 5 year chart right here. Look at this. It just won't stop. Can't stop. Won't stop. Shouldn't have sold it. All right. Back to my portfolio performance here. Interestingly enough, even though EXK went up 1.5%, we have the puts going up in value, at least the calls, and calls going down in value, which is strange because that's kind of the opposite of what should happen. So that just tells you some of the expectations of what the company is going to do next with the stock price. To be fair, it's had a really high appreciation in the last week. It went all the way from 179. It's sitting at $2 now. Luckily for me, if you remember, if you look at this history here, where's the history? I just bought on November 13th at 181, and I've just sold out today at $2 for a cool $105 profit, which is not that significant, but it's better than nothing. I've sold out of it a little bit because it just had so many consecutive up days during this last week. We have one, two, and then three, and now it seems like it's kind of petering it down, and maybe over the weekend we're looking at some more pain. If there is some more pain around this level, I'll just buy more and I'll make the same trade again, depending on how it goes. So, $100, who gives them to you? I'm sitting in cash a little bit now with this profit. $1,000, 119. Maybe I'll buy some New York real estate. Maybe I'll wait for a bigger correction here in the markets, which is the second, the last topic here. This we're just covering the trades that I made, which is just this, right? All I did was sell EXK and raise some cash doing it. And the last topic is the macroeconomics, and a lot of people are saying how, you know, are warning about all these problems, and with the interest rate rising, creating this kind of quote unquote, a lot of people have been using the word gravity now. I listened to a lot of videos and interviews, and they use this word gravity, like interest rates being like gravity to the stock market. I think I'm not gonna quote who used them, but many professional money managers, high profile money managers. So uh, people are thinking, by people I mean those same professional money managers out there, the big wigs, big whales, are thinking that the recession is near. It's going to be a deep recession, and these bad earnings that we just saw by Nvidia. Let's take a look at Nvidia. you know, Nvidia down 20%, bad earnings. And all these other, look, it's from $200, boom, 164. All these other company missing their guidance and all that stuff. So this is just the beginning of the end, and by the end meaning the central banks, especially the Federal Reserve, getting its arm twisted further and further and further until it cries uncle. And what's going to twist the arm of the Fed is this downward move in equities um, that was seemingly sustainable under the appreciating dollar caused by the higher rates, which are enforced by decree by the central bank. And they're in effect manipulating, not in effect, just they are manipulating. It's out in the open. It's not a conspiracy or anything like that. They're they're having press conference and how they plan on manipulate the market. So when you hear that manipulation of the market, it's not conspiracy theory. This is just from the horse's mouth. This is the actual central bankers, telling you how they plan to manipulate the market. So they're manipulating interest rates, they're manipulating bond prices, which is the vast majority of the market, and in effect they're manipulating the currency, which is half of every transaction in the economy. So there's very little free market left out there. For those of you who are, free market advocates or think that there's a lot of capitalism going on in the globe today, it's very much controlled. I want to say like 85% is manipulated by unelected officials and central bankers and so forth. So not that whether elected or not makes any difference. By the way, don't take that. Don't put too much weight into that statement. At least I don't believe so. Elected or not, they're the same. So regardless, that's not the point. The point is that they are manipulating. So every investor out there, every big whale is waiting, and listening very carefully how the markets are going to be manipulated next, whether the dollar is going to be forced to appreciate further. And there's this, political game that's going on with the central bank here, where they want to raise rates, but because they want to seem like they're doing the right thing, because the economy is stronger, they need to quote unquote normalize the rates. Um, and by rates, I mean like the overnight rate. It's kind of like a queue for debt. It's what all the other interest rates go off of, basically. So like all the benchmarks and all that stuff. Even credit card debt, mortgages, they all take this rate into consideration whenever they decide to advertise or issue debt. Anyway, that's enough on a debt talk. So they they want to keep raising rates because they want to soap up some of the excesses, quote unquote, in the economy. Everybody who's taken on more debt than they should have, they want to make sure that they're not continuing to do so, at least if not go bankrupt, and all the people who have healthy businesses underneath survive. But they've been keeping rates for so low that now it's causing some real trouble because most businesses that have adapted to this low rate environment, a lot of them take on a bunch of low interest debt to just to buy back their stock and to cause stock appreciation. I mean, things like that do happen, or they take excessive amounts of debt to fund projects because it's so cheap. Some people dub it free money, those same professional money managers. So, oh, look at this. What's going on here? Why is this up 37%? 3x longer. Okay, so by the way, warning, don't trade these 3x funds. All right, they have a really bad beta decay and you're going to lose your shirt. Don't say I didn't warn you. Anything 3x or even 2x, just don't trade it. Don't hold. You can trade it over day or overnight, whatever, over the course of a week if you want even, but please don't hold it for more than that. You're going to lose all your money. Like, I haven't seen this fund, and I guarantee you that the long picture here, if I click the 5-year chart, it's going to be a really steep downhill um, chart if it's been around for more than a year or two. See? Exactly. This is the first time, I promise, I've never seen this chart before. I knew it was going to look like because of the beta decay on these 3x funds, right? So this is 44,000. Okay, so if you bought a share of this, obviously reverse splits. So if you had 44,000 and just invested in this fund, you now have 126, $150. So please don't trade these triple X funds in the long term. Okay, by long term I mean anything over a week. You've been warned. Don't do it. Now, back to reality here. Um, there could be some more downside for the precious metals, but I'm going to continue to accumulate that EXK and waiting for that pop up. I don't know how it's going to behave. It's so far bottoming right now that I don't know how it's going to behave in a economic downturn. Maybe it'll stay flat like in 2000. Maybe it'll rise a little bit. Maybe it'll spike up. But I doubt it's going to have a huge spike down. It might have a little one, but not as much as the overall market. It's already been increasing for like the last, 5, 6 years or something like that. So um, I'm all right here. There's limited downside on the silver. What else worth mentioning? Okay, a lot of options expired today. So I'm going to be getting some stock and money back over the weekend. So I'm going to think about what the next move is going to be. Um, let's see if we can get the history here. Things that are expiring is URA, a call, $14 call for URA, a $10 call for C-SPAN, a $9 put for Ford, and a $12 call for Switch. This company, man, is costing me a lot of money. I don't know if I'm going to sell another option against it, a call option, or just get rid of it because it's just a nightmare to deal with. This $12 call here, if you remember, I had a $12 put. I was forced to buy it at $12, and now, even though it's 11% up today, well, it's down in after hours, but it's still nowhere nearly enough. I need it to get close to $12. And if I go to sell the call at $12, I mean, it's 8 cents here for December 21st, January 18, 10 cents. Ugh, it's just horrible. I may just have to bite the bullet and let's see how far out they go. Oh man, if I want to, January 2020, my goodness. All right, yeah, there's no way. I'm gonna have to sell a call at like $10 and just bite the bullet. Yeah, I'm gonna be losing on that trade. So this is a good example of a selling put option trade that you can't really spin off into positive territory. So, but I don't want to sell it right away. I'm gonna try to squeeze in as much as I can out of that trade. But I'm gonna end up losing money. That's how it works. Take a look at the uranium sector here. It was kind of modestly down. URA is actually up, but URG and Energy Fuels is down. Cameco, I heard a rumor that Ray Dalio is going to be buying or is buying some of this company, which is cool, I guess. It's not a big mover, especially for a uranium stock. As you can see, it went from 20 to 7.72, and now it's at $12. I really like this upward trend though. But in any case, doesn't really matter to me. I think it's a solid company, as you know. It's my second favorite, if not probably my new favorite company at some point. Um, right now, I just really like the management and their leadership. So we'll see how that goes. I wish I had more shares, but I keep selling puts, but they never get hit, and so I only have 200 shares, and I might even sell a call or two against them at some point. Okay, well, that's the overview. There's the macroeconomic picture as when it comes to rates, emerging markets, and precious metals. Probably still another little spike down, especially in EMs. At which point I'll try to make some kind of moves and see if I can switch my portfolio around so I can accumulate some more of them. Although I have a lot of emerging market already. If you see this EDF, it's an emerging markets income fund and it's been going down, but not by much, just a little bit over the past year. but it is prone to wild swings. You can see the swing over here from 1273 to 1487. It also has, the opposite can happen. Can have a multi-dollar downside, but it's a large fund, so it's not going to move that quickly. Um, I have, I'm down on it, $607. However, it gives a fat dividend of $37 every month, so I'm okay with that. All right, I think that wraps up the portfolio. Kind of reiterating some of the warnings that some of the big managers, money managers out there are warning about. Went over some of the trades, and I'm going to be looking to accumulate some EMs. And oh, wheat and precious metals had a nice day, which is good. And I think that's about all I have to share with you today. Plus $167, not bad. Hopefully that equals out to at least zero here before the end of the year. I want to collect these small dividend that they have. I want to keep the stock for a long time. All right, I think that's about it. I'll see you all on Monday. I'll be thinking about the trades that I'm going to be making then. We're up. Make sure that tell me where you at with your millionaire race. I mean, I'm going to take this to a million. I want you guys to take your portfolios to a million, at least if you don't already have a million. I'm taking this Robinhood one to a mil. So join me on the journey. Share your thoughts. Where you at? Why don't you have a Robinhood account yet? It's so much fun. Just do it. You don't have to put all your wealth in there, but just open one up and have some fun with me and tell me where you at on your journey. All right, I think that's it. Peace out.